And I
Yep.
would say silver to me is one of the most undervalued, underappreciated metals on the planet. And from an investment standpoint, I don't see anything better. As far as gold is concerned, look, it's at all-time highs, but it should be a whole hell of a lot higher. And when you realize there is no resistance above it, we've already blown through that. Sky's the limit. It should be a whole hell of a lot higher, way higher. And I think when you realize that the biggest money in the world is accumulating it, the most sophisticated bank in the world said it's the only other tier one asset, the Western price setting mechanism will go by the way of the dodo bird at some point. The one reason that I lean towards gold if I had only one choice is that it's the only other tier one asset in the world.
The ongoing record-breaking rally in gold has been nothing short of remarkable. Never before in history have we witnessed such a rapid succession of all-time highs in gold prices. So far this month, gold prices have surpassed $2,159 an ounce, $2,180 an ounce, and the $2,222 an ounce mark, notching up 3 back-to-back record highs within the last 2 weeks alone. Just so you hear that correctly, that's 3 back-to-back record highs within the last 2 weeks alone. And this could just be the beginning. According to renowned investor Andy Schectman, gold has broken through resistance levels, indicating significant upward momentum. With no visible resistance above current levels, support is now at around $2,100, signaling a bullish outlook for gold. This surge in gold prices can be attributed to 2 primary catalysts, both revolving around central bank actions and signals: anticipation of imminent rate cuts and an increased inclination among central banks to bolster their gold reserves. Bank of America research has revealed that central banks have amassed gold at an unprecedented rate, acquiring over 2,100 tons of the precious metal in the past 2 years, reflecting strong demand. Despite reaching new all-time highs, Andy emphasizes that gold and silver are rapidly being withdrawn from exchanges like COMEX and LBMA. This suggests sophisticated buyers swiftly acquire gold at lower prices from Western markets, aiming to reduce exchange reserves. In Shanghai, where gold is priced significantly higher, traders are encouraged to exploit the price difference by purchasing in the West and selling at a premium in Shanghai. Andy asserts that this situation is even more pronounced with silver, as prices in China exceed those in the West. India's record purchase of 2,200 metric tons of silver in February 2024, surpassing the production of American Silver Eagle coins over the past 3 years, further suggests a strategic move by significant players to acquire physical metal alongside the depletion of reserves in Western exchanges. We will present clips from Andy Schectman's interview with Stacking Surfer. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
The markets are signaling much higher prices. I mean, we can start with gold, and we can say that gold has, of course, blown through resistance. There is no more resistance above it. Support now, in essence, would be 2,100, and when you're in a market where resistance is gone, in a market where the world is accumulating at levels that we've never seen before, where the central banks are buying it hand over fist, really the sky is the limit for gold. Who knows how high it goes, because you don't have anything above it to act as resistance. And at the same time, we're seeing tremendous amount of gold bled off of the exchanges, off of the COMEX, off of the LBMA, and this signals very sophisticated buyers that are just gobbling everything up as fast as they can, taking it, using the subsidized price of the Western market, the price setting mechanism of the Western market to bleed the exchanges dry. And that's also, I mean, it's deeper than that. I mean, we can talk about the fact that what's going on right now in Shanghai, as an example, where gold is priced $70, $80 higher than it is here in the West. That's arbitrage. They're slowly turning up the heat to entice the traders who have access to the COMEX, to the LBMA, to buy it here in the West and then deliver it at a premium in Shanghai, where it will never come back. Currently, silver is basically $28 an ounce in China right now, almost $3 an ounce higher than it is here in the West. So here again, they are incentivizing the Western traders to buy it on COMEX or the LBMA and deliver it in in Shanghai, and it's even deeper than that. I mean, we're looking at a period of time right now where the LBMA in terms of silver has reached all-time lows in silver holdings at 814 million ounces. But 70% of that or so belongs to the Bank of England and to the ETFs like SLV, rather.
Yep.
95 tons have moved from, this is in gold right now, 95 tons of gold have moved out of the registered category into probably what's called the others category. And the others are believed to be sovereign wealth funds and family offices, big sophisticated investors who are standing for delivery on gold off of COMEX. 95 tons. That's a lot, right?
That's
and
a lot.
When we talk about the big one, however, is silver. Over 1,200 tons is stood for delivery this year in silver. India just announced that they imported 76 million ounces in February. They've bought over 400 million ounces in the last 2 years, which coincides with almost the exact same amount being bled off of COMEX in the last 2 years. So this metal is and I'm going to get to a point. What I'm really trying to get at is to show you what's really happening, and that the big money across the globe knows what's happening. So India imports 400 million ounces over the last 2 years. That's almost exactly what's left the COMEX, right? India says they just bought 76 million ounces in February alone, right? The Shanghai Metals Exchange is pricing silver $3 higher than the West. So this is all moving in that direction, but that leads me to something.
Over the past few years, there's been a notable absence of complaints from certain countries about the suppression of gold and silver prices. Why? Because they're quietly accumulating these precious metals. Amid China's current economic downturn, the Chinese people are flocking to buy gold, since its value is more likely to remain stable over time. And even the Chinese regime increased its holdings by 30% last year. In 2023, the People's Bank of China, PBC, and private purchases of gold in China increased by 30% compared to the previous year. With debts soaring into the trillions and the value of currencies plummeting, many countries are accelerating their accumulation of precious and industrial metals. Moreover, Andy highlights China's strategic acquisitions, such as the London Metals Exchange, LME purchase, signaling a broader trend beyond just gold and silver. China is positioning itself as a dominant player in global commodity pricing by controlling exchanges for base metals and agricultural commodities. One thing is clear: China, along with other emerging powers, seeks to challenge Western exchanges' dominance in setting commodity prices. As Andy suggests, the emergence of exchanges in Moscow, Shanghai, Dubai, and elsewhere could eventually supplant Western exchanges, reshaping the global commodity landscape. Let's get back to the interview.
Another thing I've been saying, here's the new part. I have been saying for a long time that the reason these countries are not bitching is because they are the ones accumulating it all, right? So what are they doing in China? Slowly turn up the arbitrage heat so that silver is $3 higher in China, gold is $80 higher, and the stupid brain dead traders, the commercial bank, sophisticated bullion bank traders who have access to all the platforms, they'll buy it off the LBMA, they'll buy it off the COMEX, and they will deliver it at a premium, the arbitrage. It will never come back to China. So that's what they're doing. So they understand what's going on. They understand that we are suppressing the paper price in order to support an illusion of a bond market that is stable and strong and a government that is stable and strong, yet we are insolvent and we are broke and we are 150 plus trillion in debt. And a trillion seconds ago was 31,688 years ago. People know. Not only that, we weaponize and even confiscate your assets if we don't align the right way. So, we're getting to that last moment. And so the countries are accelerating their increase in consumption and accumulation of all these commodities. And just as a side note, before I dot the I's and cross the T's here, a couple of years ago, the Chinese bought the London Metals Exchange, the LME, which is primarily base metals, copper, zinc, steel, you name it. And now they're going to start warehousing those metals that are traded on the LME in China. Do you see a trend here? It's not just gold and silver. It's all the base metals, all the rare earth metals, and even all of the soft commodities like wheat and soybeans and corn. Oh, wait a minute. The BRICS Grain Exchange. They just developed the new BRICS Grain Exchange. And you know what they say? Global prices are primarily determined by the Chicago Commodity Exchange. The ministry insists that the BRICS countries are the largest grain producers and exporters, but have no leverage to influence the price of the agricultural commodities critical for food security. So what are they going to do? They're going to start pricing the grain exchange. I said they'll do the same thing with gold and silver. And what do you know? They're all talking about the Moscow exchange. They're all talking about the Shanghai exchange. They're talking about the Dubai exchange. Well, United Arab Emirates did just join the BRICS. Those two countries are part of the BRICS. Here's what's going to happen. At some point, when no one is stupid enough to deliver these very, very strategic, not just industrial, but strategic and precious metals and commodities, where the West sets the price, where you can drop oil to negative $40 a barrel, really? Because the futures market is controlling the commodity market. At some point, just like that, they're going to say, we don't believe in the Western markets anymore. For everyone in the Southern Hemisphere, it's now the Moscow exchange, it's now the Shanghai exchange, and the exchange in Dubai that is going to set the price of all the world's commodities. So let me go back to what he was saying. He says the second piece of the new currency is as follows. He says, for the moment, price is determined by Western speculation. So they know what's going on. We produce these commodities, we consume them, but we do not have our own price mechanism, which will balance supply and demand. During the COVID panic, the price for oil fell to nearly zero. No, it fell to negative 40 a barrel.
Yep.
It's impossible to make any strategic planning for economic development if you do not control prices of basic commodities. Here's the kicker. Price formation with this new currency will get rid of the Western exchanges of commodities. So what they are doing, they are using the suppression of the Western make-believe commodity exchanges to drain everything. Not only that, they bought the damn LME for all the base metals and all of the industrial metals. They're building a grain exchange. Can't you see how everything you would need, instead of opaque debt instruments, everything you would need to be a superpower, everything you would need to be an industrial superpower, a commercial superpower, they're buying and accumulating it all, and the gold and silver. So it's coming. It is.
Mounting evidence suggests that we are entering a new era for gold, marked by what many analysts call the beginning of a historic supercycle for the precious metal. The gold market is expected to adopt a more cautious approach in the upcoming week, balancing long-term bullish sentiment with short-term market conditions. Where are prices heading next? Share your thoughts in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.